Let's take it across to Sandeep Sabarwal, who's joining us on the show. Sandeep, I'm not sure if you have been tracking the RPSG Group that closely or not, but companies like CSC, Philips Carbon, First Source, they've come back on the investor radar quite sharply.
Yeah, so Philips Carbon has been doing well along with, I think, the RPSG Group company. So one of the companies we hold, KEC International, that's been doing well over the years, and it continues to do well. Ex of that, they have, I think, C8 is in the group and other companies. So I think most of the companies of the group have been doing well in general. Now, stock-wise, depending on valuation and company cycles, the stocks move, but in general, the group has been doing decently.
Wonder what you've made of the reports doing rounds, Sandeep, that KC could perhaps be one of the candidates to take over ITD. Now, given the fact you track that closely, would you have a view if it does transpire?
In most of the acquisitions, my view always is that it depends on the valuations at which an acquisition happens because KEC has a strong presence in the civil works side. So if they take over ITD cementation, depending on the valuation, it could be a fit. But then it's purely on valuation, so we cannot generalize and say that it will be good or bad.
We'll see how it really pans out. But Kunal Botra is also with us in the studios. Kunal, what do you make of the market mood right now? We did manage to hit that mark of 25,000 finally, but did not sustain at that level. And especially the broader markets, they are giving up quite materially.
Well, yeah, I think we've seen yet again another similar behavior, I would say, for the markets. We had the same tendency for the index when we had managed to break past about the 24,000 mark and then 23,000 mark earlier also, that the market goes into a breakout of those strong psychological levels, retraces back for a couple of days, and then tries to just about stabilize at those round figure numbers. So I would probably believe that we are into a similar phase for the index yet again. No major damage in terms of the larger cap names is what we can see on the screen so far, because not too many large cap stocks are showing any major kind of a reversal. The ones which were which had rallied up higher on an intraday basis, they are the ones which have retraced. You look at the premium for the indices, that's dropped down a bit, which could probably be an indication that maybe some sort of profit booking has come back into the individual stocks or maybe individual index positions, but no major change in terms of the open interest data so far, which could probably give us a signal of a major reversal. So as of now, expecting the indices to just about consolidate at the 25,000 mark.
Okay, consolidation at 25,000 mark thereabouts. But Sandeep, what's the view on autos as a basket? I mean, we are going through the July data so far. It doesn't look very impressive. Though the earnings from the companies, the likes of Maruti, etc., were quite strong. Even M&M surprised on the margin front. And we had the management this morning talking about how things are looking up, even on the rural side of things. Would you buy afresh when it comes to the auto sector? And if yes, what segment, which stocks?
So auto sector results in general have been good. So Maruti numbers were good, M&M was good, Bajaj Auto numbers were good. So I think overall the sector is doing well. They have tailwinds in terms of input cost pressures not being there and value additive products getting sold. So value growth is more than volume growth, and that's adding to the profitability of these companies. Now, for this month or a month or two, I think there could be inventory adjustments where wholesale dispatches might be lesser than retail sales because there have been talks of some sort of 3-4 days extra of inventory built up in the system. So I think that might get adjusted. So based on these news flows, if we see the stocks correct somewhat, I think it's a good sector to be in.
It's a good sector to be in. Have you looked at the Ola IPO closely? Would you be a buyer or a subscriber to that? It opens for public tomorrow.
The IPOs, we know they get subscribed, they get listed at a premium, but purely as a fundamental analyst, I don't see any value in the stock because I don't think they'll be able to make profits. The competition from the old incumbent players is growing substantially. They have much better cash flows and ability to withstand losses of the EV electric vehicles as the growth happens. So, and Ola will continuously lose market share in my view over the next few months and quarters. So, So I think investors who will be betting on this will be betting on one profitability coming, which is tough, or them being able to retain their market share, which is also going to be tough.
Post the earnings season, Sandeep, has your view changed for a few sectors? Have there been some fresh bets that have come on your radar, or something that you have booked the losses or profits out of? Any recent moves?
So in general, we have exited a lot of the railway plays because we thought that they had run up a lot. So stocks like Titagar or Texmaco Rail or some other PSU related railway stocks, we have either exited or trimmed holdings because I see limited valuation comfort in those. Other than that, in terms of fresh purchases, I would wait and watch and see the markets a bit, wait for the markets to correct a bit before buying.
Watch, that's the view coming in on the markets right now. Quick look at some of the losers as well. Sonata Software is down 8.5%, Birla Soft is down 5%, and these are some of the result reactions which are still reacting second, third day on the trot. Zee Entertainment, wherein the commentary was strong, is actually seeing a profit booking and down about 4% in the trading session right now. And even some other companies like NCC, ACC, they're all in the red. In fact, Kunal, what's your view on Zee Entertainment as a stock? Would you recommend buying at these levels? And what about Birla Soft, Sonata Software, or any of those smaller IT companies?
Well, Zee Entertainment would not suggest a buy. In fact, this is a stock which has been struggling, significantly below its, major moving averages. 225 to 30 was the level the stock had broken in December 2023, and from there on, the stock had been going through a corrective phase. It's corrected more than 40-50% as well from those 220 plus kind of levels. So, which means that the stock is still going through a corrective phase, and the correction still seems to be at large continuing for Zee Entertainment. So, would not suggest a buy even at current levels, even though there are phases where the stocks may get into a 5%, 10% kind of a rally because the overall trend is still negative. On the other hand, I think stocks like Birla Soft, I was looking at the charts over the very short term, the stock has fallen below its critical moving averages, and the last couple of days we've seen that the stock has the sell-off is intensified for the stock from 730 odd levels, 715 odd levels. The stock has now fallen back towards 650 mark. It's broken below the 200 and the 50-day moving average, which means that there is near-term weakness which has emerged into the stock price. So, would not look at buying the stock at current levels unless it comes back about the 680 to 700 mark.
One space which has been doing fairly well, Sandeep, is the power and the power utilities at that. Of course, Power Grid NTPC held their analyst meets. They've upped their capex guidance. They're talking about a 7 trillion rupee investment till FY 32. There was earnings that came in from Torrent Power, from the private utility space, and that was very stunning as well. Fresh buys into power, or just book profits or stay away?
I think this is again another sector where the tailwinds obviously have played out in terms of near-term power shortages helping the merchant players as well as huge additions on the renewable side. However, I think the valuations are running ahead, and if you look at the ROE of most of these companies, these are in single digits. So such low ROE companies commanding 40, 50 PE or even higher is excessive in my view.
The view coming in on some of these power companies, but finding growth at a good value, that's the kind of conundrum that a lot of investors are facing right now. Sandeep, thanks so much for joining us today. What we'll do is take a quick break right now. On the other side, the management of Darbar will join us to talk to us about their earnings. The volume growth came in at around 5%. We'll dissect the numbers in the way forward after this very short break.
If you like this video, then like, share and subscribe to ET Now.